to talk about a dirty little secret that's out there in the property world. Off-plan new build flats. That's right, I'm talking about property that you buy before it's even been built under the guise that you're getting it at a discounted price. Because it's got the three words we all love to hear: below market value. So if you've been thinking about buying off-plan new build property, especially flats, as an investment, stick around as I'll talk to you about why I wouldn't be buying this type of property in the current market, my own experience with new build property, and what I'll be buying instead if we want to build wealth, generate cash flow with the least amount of risk.
We have special secrets.
So let me ask you a question. Do you agree that the property market can go up, down, and sideways? Yeah. Do you also agree that the economy can go up, down, and sideways? Yeah, it does. And what's interesting about both of these things is there's been a lot of studies into the property market and the economy as a whole. One of those studies has been done by a British economist called Fred Harrison, who went back 400 years and was able to then predict that the market was going to crash in 2007, well before it actually did. He came up with this idea that there's an 18-year property cycle. And within that 18-year cycle, there's a property cycle that lasts for 14 years, and that starts from the bottom of that cycle up to the peak. The 18-year property cycle has 4 phases to it: a crash and recession, the recovery, a market correction, and then a boom. And we can tell from looking at the data that the last low point in the property cycle was in 2012. That's when it was at its bottom. And therefore, if we're looking at Fred Harrison and his theory and going, okay, well, the bottom to the peak is 14 years, 14 plus 2012 will take us to 2026. So right now we're in the middle of 2023 and we're entering the last 2 years of that property cycle. And those last 2 years of the property cycle are also called the winner's curse. And this means that people are feverishly bidding on property, things like auctions, and basically find what happens later on in the years, as the years go by, is that they've overpaid for that property because they've got caught up in the boom time and thinking that prices are going to be forever going up. We can check this data out for ourselves because history tells us that the last crashes occurred in 2007, 2008, 1989 and 1990, 1971 and 72, 1953 and 54. And what's the time difference between each of those crashes? 18 years. It's getting a bit freaky. Buying off-plan new build flats became popular with the advent of the buy-to-let mortgage in the late 1990s. And this meant rental properties and investing in property in general became mainstream. Any Tom, Dick or Harry could go and get a buy-to-let mortgage based on the rental income, because back then there was loads of properties that were positive cash flow. Those types of property investors I call speculators. And speculators have these types of characteristics. They buy investment property that they would like to live in. They look at any type of property that comes up, from flats to houses, just as long as it's in their price range. They search on Rightmove for hours in any area to the point they feel overwhelmed. Buying decisions are made based on their beliefs, not on research. Then there's a new way of doing property investing, and this way I call strategic. Strategic investors are focused on specific types of properties based on a target tenant and the local demand. They target specific areas based on key selection criteria. They manufacture their profits rather than waiting years for capital growth to happen. They use outcome-based decision-making. My mantra as a property investor is to make the most amount of money in the quickest time with the least amount of risk and the least amount of aggravation. So with that in mind, let's go back in time to the point when the last crash happened in 2007, 2008, and look at what if we'd have been a speculative property investor and bought off-plan new build flats back at the time that the last crash happened, and fast forward to today, 16 years later, to see what would have happened to that particular property. So let's start in Salford, not just because Gary Neville owns a football club, it's also part of a major city in Manchester. I've picked this particular postcode called M54LY as it's got lots of new build flats in that particular area, and it also had new build flats going back at the point of the last property crash. So we can use Rightmove to look up the sold prices in M54LY, and I've picked within a quarter-mile radius, and I've filtered to leasehold flats. I'm going to change the order of that so it's price ascending, and then let's just see what we can find here. So here we see someone's bought a property on the 27th of September 2007. Now that, September 2007, was at the peak of the crash. And they bought it at that time, 176,000. So with new build properties, you're buying it off plan. They would have committed to this purchase before this time. And look, they sold it 2 years later and they got 74,500 for it. They've lost over £100,000 on that particular property in 2 years. Here's another one. Again, they bought it slightly earlier, 2006. They sold it 3 years later. They only sold it for 75 grand as well. And they bought it for 133,950. Here we go. This person had it a bit longer. They bought it in 2008 for 144.5 grand. They sold it in 2013 for 85,000. Here we go again. Someone bought it in 2007, 154 grand. Sold it for 105 in 2009. Those people in 2009 then sold it a year later at the depths then of the recession, still losing money, and they sold it for 85.5 grand. Here's another one, bought it in September for 169, sold it in 2010 for 87. So, you know, you can just keep going on here and seeing all these different properties that essentially still never came back and made money. Look, bought in 2009, 103, sold in 2016 for 94, nearly 95. In 7 years, lost money. Then there's no capital growth. Again, one here, 2006, 123,800. Bought in 2016, sold in 2016 to someone and got 95 grand for it. Lost about £30,000 in 10 years. Still didn't make any capital growth. And here's another property, new build, bought in February 2007, so before the crash, for 152 grand as a new build property. And then they sold it in June 2022, which is probably the height of the boom that we're currently in right now, for 115 grand. And that's a loss of £37,000. These investors were sold the dream of buying discounted property off plan that's a new build and it's a flat and that they can easily rent out in a major city centre. And this is what happened to those investments. None of them had read, unfortunately, Fred Harrison's book that he published back in 2005, Boom or Bust, The Great Depression of 2010. If they had have read that book in 2005, none of those people would be buying new build flats in 2007. They'd paid their £1,000 reservation fee and then had to exchange contracts 28 days later. So they were committed then to buying those properties. Then they had to wait for those properties to be built. And no matter what was happening in the property market, they had to then go and buy those particular properties at the price that they'd paid, this discounted price, while the entire property market was crumbling around them. So, as I said at the start, I had my own experience with new build property, and I'm not too proud to admit that I actually bought off-plan new build property, but it wasn't as an investment, it's my own home. This was back in 2003 though, so it's a long time ago, and I vowed after this experience, never was I ever gonna buy off-plan new build property again, potentially never new build property again. And let me explain why. So the property market in 2003 was doing okay. It was kind of going up, a bit like it is now. So we take away 3-4 years away from the crash in 2003, right? If there's going to be a crash in 2026, we're a few years away from that still at the moment. So you might be thinking, okay, it's good to buy a property, but off-plan new build properties, let's see how well they do. So I bought this off-plan new build property. I thought I was getting it at a good price. It was advertised for £515,000. I agreed a price of £495,950, no paying the stamp duty. So it was a 5-bed detached, double garage, good garden front and back, own driveway with a good builder, reputable builder. So this property was in Bexley, and you can see detached property prices were averaging 281 grand, and they rose in 2007 up to £328,000. The reason why I'm using 2007 I'll get to in a second. And so that as an average is a £47,000 increase from the point that I bought it in 2003 to 2007, before the crash. So I lived there for a while, but then I moved out and I rented that property, and it wasn't bought as an investment, so I eventually wanted to sell it as soon as that tenant went out. So the tenant eventually gave me notice. I think they stayed there, well, essentially till 2007. And so I then put the property on the market, and the timing was actually quite good, because what did we know? There was a crash going to happen at the end of 2007 into 2008. But I managed to sell this property in the middle of 2007, but I only sold it for £505,000 in that time that I'd owned it. So I made £10,000 on it, just under. But then I had to pay commission to sell it and all those types of legal fees, all those types of things come into play, legal fees to buy it and things like that. So overall, probably broke even, didn't make any money on it. And I'd owned it from 2003 to 2007. The average price, which was less than this, would have made 47 grand. So this one, which was nearly double the kind of average price, should have averaged at least around £100,000 in capital growth in that 3 to 4 year period. So I supposedly was getting this at a discount, 20 grand, but I essentially made no money at all when it came time to sell it. And I sold it before the crash. If I'd have tried to sell it after that, God knows if I'd have needed to make a fire sale or something like that, you know, that's what I would have lost even more money on that property. I probably just would have rented it. But if I'd have been forced into sell it in 2008, 9, 10, 11, 12, I don't think I've ever, the value of that property wouldn't have ever got back to that £500,000 level. Everything dropped. So bear this in mind if you hear other property experts tell you about buying off-plan new build flats in major cities just like Salford, because you're not getting a discounted price. You're actually paying full market value for that price, no matter what they say. They are saying that it's that price because they're assuming that the property market is going to still keep going up. If the property market starts to fall away, you're no longer getting a good value for that property, even if you've got it at a discount. And instead, if you buy another property that's already available, as in it's already built, it's an established property, you can start renting that property out as soon as you become the owner of it and start generating additional cash flow that way, as well as if the market does go up, you're then able to take advantage of capital appreciation. I've got no property to sell you. I'm not going to get a commission. I've not got an agency fee. I'm not going to get an introducer's fee from any developers. Other property experts may be getting these types of incentives to tell you about property investments that they think are good for you, when in fact they're actually very good for them. My aim is to help you become a strategic property investor, so eventually we may be able to buddy up together and joint venture. That's my aim with helping you achieve success. You'll struggle to grow a profitable property portfolio if you're going to be just buying off-plan new build flats, because there's no opportunity to manufacture any of the growth in those types of properties or to achieve above average capital growth over the time that you hold them, especially if you're going to be buying those properties at the end of the boom phase, during the recession phase, and at the early stages of the recovery phase of the 18-year property cycle. Let's take a moment now to look at flats as an asset class versus houses as an asset class. At The Property Investor, our aim is to build wealth, and wealth is an accumulation of valuable assets. Simply translated, this will mean that we want to own assets that will hold their value over a period of time, and ideally increase in value over a period of time as well. And ideally, we want this to happen in the quickest amount of time. A lot of property investors buy for cash flow, and this is a good strategy, but ultimately we also want to be building wealth as a property investor. Really, we want to be retiring early if we can afford to do that. And we also ultimately, if we choose to stay in our jobs and build wealth, we want to then be able to achieve enough wealth that when it comes to our pension years, we don't have any money worries. So if we look at flats versus houses again in Salford, what do we find? So I went on Land Registry where you can see historical prices over a period of time, and this is always the average. So we can put in there Salford, and then we can pick the date range. So I just picked January 2000 to January 2023 because that's the most up-to-date price range I can get on there. And then I picked semi-detached, terraced and flats and masonettes. And then we can see the three different lines that we get presented to us. And so we can see that the price peaked around that October timeframe in Salford, where we had semi-detached houses value 152 grand, terraces 119 and flats at 120, nearly 121. Then if we fast forward to the start of 2023, we can see that the average price for flats rose to £168,000, terraces to £195,000 and semi-detached to 265 grand. So flats went up by 40%, terraces by 64% and semi-detached 74%. So if you'd have bought a terrace property, which was actually as an average slightly cheaper than a flat in Salford back in 2007 and had those 15 years of accumulated value, that terrace property now would have accumulated as an average 64%, whereas the flat would have only accumulated as an average 40% over those 15 years. The biggest argument for new build property is the fact that you're buying something that's totally new. You get a warranty with it, it's energy efficient, and no one's ever lived there before. It's got new appliances in and things like that. So all those things to some people are worth the premium that you might be paying. So other people might also describe that the property that you're buying off-plan new build is that you're able to get it at a discount. They've negotiated a specific rate with the developer to give it to you, the investor, at a discount. So at the end of the day, you're paying the market rate for that property. No one is letting you buy properties below market value. There's no incentive for them to do so. So you're paying full market rate no matter what the sales brochure says or what you might have agreed with the developer. Ultimately, they're happy to sell at that price. There's no one else that's prepared to pay for it. That is the price that they'll pay for it. No one's going to pay the 30 grand on top that they're saying that you've got off that price. If they were, they would be selling at 30 grand above and then putting the price on that and saying you've got it at that price as a discount. But at the end of the day, in an upward trending market, if you're buying these types of properties, because you have to wait, so in an upward trending market, the properties appreciates in value anyway. That's why to a lot of people, they think this is a good deal, which everything is a good deal in an upward trending market. Where it comes in as a property investor is understanding the market cycle, which we've talked about, the 18 years, and understanding what types of properties to go for that will not be impacted so much by the 18-year market cycle. The downside to buying new build properties is the fact that they are at a premium price because you're paying for all these extra things, the warranty and all these types of things. You're also going to have delays with the build. Never has a new build property development ever completed on time. You're also going to have things like snagging issues. And worse yet, you may have major faults in that build, just like these people found in Manchester, in Islington Wharf, where there's all sorts of problems with that particular build quality. And let's not get into the issues with the cladding on the outside of apartment blocks. Coupled with this, a shelter survey also found that more than half of all new build properties have major faults with them. Mortgage lenders will also require you to put a bigger deposit down when it comes to new build flats. And that's because they recognise the risk associated with it, they recognise that you're paying a premium. No matter what anyone's told you, whether you're buying it at a discount or not, you're still going to have to pay a bigger deposit down with a new build flat. Then we come to the issue with leasehold properties. So every flat is essentially a leasehold property. It's never freehold. And with leasehold properties comes service charges, sinking funds, ground rent. You've also got lease renewals, because at the end of the day, you don't own the property, the freeholder does. You're just leasing it from them. There'll come a time where that lease will expire, whether it's 999 years or whether it's 99 years. Depends what's been agreed as part of that leasehold with that freeholder on that property when the developer comes to sell it. And those lease renewals, they can cost a lot of money to get renewed. But the biggest thing that's going to really get you, especially when we come to the end of the boom time, is the build delays. Because the build time frame, normally when they start marketing the off-plan, they might have started the build, or they might just be about to do it, or they might be a bit of the way through it, but they're nowhere near completion normally when they start. And then when they've already gone on, no doubt they've raised the prices and there's only a few left that are not sort of the great ones. They might save the penthouses maybe for a later phase. But essentially, you're having to wait for that build time frame. At the end of the boom, you are going to then pay the price for that delay, because you could find that the property values have then gone down, and therefore the mortgage lender isn't going to lend you as much money as he was due, say 2 years prior. You've then got to find a bigger deposit to go put down on that property, but you've already exchanged contracts. You've already paid your 10%. And with these build delays, you're then having to sit there while the property market around you starts to crumble, because you've bought at the height of the property market, just like these poor people did in 2007. So much for buying property at a discounted rate. I see off-plan new build properties as a speculative investment, the old way of investing. The new way takes a little bit of extra research, but you can find a better property that will generate above average capital growth, that you'll own freehold, and will able to manufacture some profits through renovation or refurbishment. This is called the strategic way. If you'd like to become a strategic investor, I'd like to invite you to join the waitlist for my new program called Property Accelerator. This program is going to enable you to find, research and buy freehold residential property below market value, so you can refurbish, rent and refinance those properties out to grow a profitable property portfolio that can potentially replace your earned income. Thanks very much for watching. I really do appreciate it, and I'll see you next time.